There is one stock that is about to skyrocket. The company just released Q3 earnings. They're in logistics, which is not AI, it's not data center related, but it's also not part of a bubble, because I don't know about you, but I don't see self-driving cars, let alone self-driving trucks, anywhere near where I am. So logistics companies appear to be here to stay for now, before they get maybe into collaborations with companies like Tesla. I mean, it's very early, despite Elon's visions for the future. So the company is XPO Logistics, ticker symbol XPO, and their less than truckload segment had their highest quarterly earnings ever. It's only 300 million, but the reason that segment is interesting for them is it is a very high efficiency opportunity, where I'm not going to make a leaps here, but what could be happening is retailers are kind of struggling, a lot of them, and they're not necessarily all requiring, as much as they used to. So I'm sure it helps to be able to deliver a full truckload to the same city and have it delivered to multiple store locations or from multiple suppliers. So any way they can make the most use of that space is great. The revenue shows that at over 2 billion of revenue in total. Company's doing well. Is coming up to sort of a flag formation, which people say doesn't really matter. It does matter, because the price is going to make a choice when it gets to that level. And price is, of course, the market. The market is people, is buyers. The chart matters, is all I'm saying. There's another company that is coming up to an important price level. It's called MongoDB, ticker symbol MDB. They're the database for a lot of big companies, including Stripe, which is was the largest private company in the world before OpenAI valuation exceeded theirs. Difference is Stripe, we don't get to see their numbers, but it is not unreasonable to think they're profitable, maybe very profitable, given what they do. Doesn't require a ton of compute. They just have a lot of transactions going through their platform, and they take a little piece. So MongoDB is the database for them. So they get paid as well every time Stripe needs to create another table or takes on another client who puts more transactions through their databases. So those are the two companies. MongoDB just had earnings at an important level. I think both of these have the opportunity to go up significantly in the near future. I'm not a financial advisor, but it certainly looks like the potential is there fundamentally, as well as price levels. So let's take a look.
This is Sam Putnam.
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 All right, so there's a whole host of tickers that might be interesting: CoreWeave, NBIS, Path, SMCI, VRT, SIM, and we could look at those. This is XPO. I think this is interesting given this flag setup and given this recent earnings. So it's at a pretty clear level. It sold off significantly, but got bought up. So someone wants this stock. And that's literally how institutions, which are just, someone, wants to get bonused and get the best price for the stock that they can. And a few dollars really matters when you're buying, 100,000 shares or whatever they're buying of this. The amount of shares traded on this day alone were 2.5 million of $100 stock. So we're in the hundreds of millions, high hundreds of millions. And yeah, low hundreds of millions actually, but still, the price is definitely holding up. I think MongoDB looks interesting as well, and is at a pretty similar level in terms of shares traded, $200 million per day, dollar volume traded, I should say. It's important to look at the volume as well as the chart itself. tariffs definitely hurt e-commerce and hurt trucking. But you know what? Tariffs hurt everything. And it might be a buying opportunity for that reason. I don't know exactly which sector is next to go, but the whole point of this type of investing style is you don't have to say, MongoDB is going to be the next stock right here, just because it had great earnings. It might be, it might not be. Databases are definitely going to be required as long as we continue to use computers, and software is super high margin, even though everyone is talking about AI eating software. AI is software. So it's kind of just like, it's kind of elitist talk, I guess you could say. It's like relevant in 10 years from now, whereas the market's happening right now. But I don't want to undersell AI. I mean, CRM and ServiceNow, CRM and Salesforce are both down significantly, those two stocks. But here's the level for MongoDB. Here's that close at 400. That's that psychological level. So if you buy it over there, you risk a few bucks and look for $30 to the upside. That's what you're looking for. And if you want to get super granular here, maybe buying it at 400, it doesn't make a lot of sense when it's already at 409. And I would agree for someone who said that. This open would be another risk, 405, or maybe even this high, 420. The whole idea is you pick a level and you stick with that level, because if you're jumping around, you're going to have a bad time. So we'll just make a note of these sort of in reverse order, because these are opportunities that you may be considering. But in general, I think what makes the most sense is the stocks that had recent earnings. So let's look at MongoDB's earnings and let's look at XPO, and then we'll jump into a little comparison. So MongoDB was $600 million in revenue, 20% year-over-year increase. Subscription revenue is that revenue, which is great. They actually started in part as a consulting company. I know one of the people who started it was like educating people as well. So I think that's helps evangelize it, but now of course that's not scalable. So the great part is that their customers like them and their customers also use them. So it was sort of like a grassroots groundswell of demand. This is a lot of customers, 60,000. And they raised guidance. So strong beat on, money and money made. So revenue and earnings per share exceeded expectations, and guidance was raised as well. So that's why I think this opportunity is pretty good. And then as far as XPO, $2 billion in revenue is pretty much near expectations. But the earnings is a little bit higher. So they have a little bit more margin. And part of that, I think, could be related to what we talked about. I talked about, you're watching this recording, the live, of that efficiency from that less than truckload, $300 million earnings, which is the highest ever. So this is a big deal. The AI-driven routing as well. That is a application for AI, even as AI helps with self-driving. It's also helping these companies be more efficient in the near term. So that's what to look out for in the long term. You don't want to hold XPO in 2035, but we're not there. As far as these companies that you might have recently seen, I mentioned it in here, but I also mentioned a very significant risk level, which is right here. Or, this close, whatever you chose to risk, depending on where you bought it. And this had a price downgrade and just got crushed. So do price downgrades totally matter in the long term? No. But you still want something to hold before you just try to catch a falling knife, in my opinion. VRT This power generation company is interesting. You might be looking at this as well. This is pretty ugly, but this was the down day in the SPY that we talked about. You don't have to worry exactly what the market's doing. This thing's been charging up. It's a little sloppy, but if it can build something out, that's definitely interesting. SMCI as well is it's in this bottoming category. It's tough to buy after messy earnings. It's kind of like, this is your ideal scenario, right? As you pick the right spot and then you get a 15% like you got with Meta. But SMCI is a semi, just like A-Lab. And yeah, maybe these guys got shaken out and you're in at the right time. But I'm not a bottom dip buyer. I'm not to say this won't work for you. But it's not really my cup of tea to guess here when you might, be stuck for another 10%, 15% down before you get a move. So that's just me. Path is another one that people have been talking about. I talked about it as well. They had solid earnings. This one I was excited about and still am. And this is the level to buy it at 18.4. They have that collaboration with Microsoft. Envis, Nebius is this NVIDIA invested company. I think NVIDIA invested, $700 million in them. So it's not a lot for NVIDIA, but it's a lot for a startup. And they are this GPU infrastructure layer. This is a little worrisome, but again, this is that market day. And it seems to be building out in the right direction. It would be great if it built out a base instead of just sort of marched up like this, because this is hard to get situated in without getting stopped out. But sorry, this is just totally frustrating me, not remembering what happened on November 20th in the market. It went down a lot. So we'll jump into that. But this is this logistics company, 100,000 employees, 50,000 customers. And they're multinational. So I think they've been around. And then MongoDB, again, a massive company that's been around for a couple decades. So I don't really know what to say about these besides they're real companies. And they're probably more worth buying than a lot of speculation names. So looks like this was the little AI bubble pop. I'm not sure there was any particular reason for that, but on a particular day, I'm sure I talked about it. The important thing is that the SPY is looking okay now. No one can say exactly what we're going to do, but gold is holding up here, and people were saying down here, well, they were saying all along this point to buy gold, but it's not when people say you must own gold. This is when people were saying you must own gold. And of course, what happened there was selling. So I think this move up is definitely interesting. It's going to be something to watch. I don't know that I want to jump in any of these names right now after they just had big moves, but it's something to definitely keep an eye on. NEM, AEM, KGC. KGC is the big gold miner. Could we have another rip like this? We could, but I'm not Mr. Fundamental. You could say that gold is becoming a safe haven as Bitcoin becomes more unstable and people got liquidated, and ever since that liquidation day, we've just gone down, down, down. This is this November 20th day. Someone in the comments has got to tell me what happened on this day. This was only like a couple weeks ago, but it's almost as big a down day in the market as that crypto liquidation day was, which was the rare earths day. Not in terms of actual Bitcoin drop, but silver as well, sort of leveling off. AG is the way to look at that. So these commodity names, the idea is gold is a safe haven, right? So if the market rolls over, maybe gold does break out. But at the same time, people were buying gold in September when they were buying the market. So it's not really that simple. But you don't have to pretend to know what's going to happen unless you're trying to basically woo a bunch of investors. All we really have to do, or you have to do, I assume, is you're up to the same thing as me, otherwise you wouldn't be watching this video, is pick a price level, see what investors are actually doing, and then say, okay, well, they definitely want XPO because there's a lot of buying over this 145 level. So risk 144 and risk $1 to make 10. Now, could it go up a lot more? It certainly could, but you could sell half and then trail the rest. So that's XPO. And then for MongoDB, we already went over that level right there. So there's those ideas. If you like those ideas, hit that like button. Love the live stream questions, comments, ticker ideas, all of it. And you'll see that in the recording. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe button. I'll see you in the Discord on Monday. Head over to stockscommunity.com to see those testimonials. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.